Hey everyone, and welcome back to the Gold IRA Blueprint Podcast. You know we love to dig deep dives into the most interesting corners of legacy planning. And today we're really going beyond the basics. We're talking about how to use luxury assets, things like gold IRAs, to build wealth that lasts for generations. And we've got this really insightful article here that's going to help us break it all down. And I'm excited to dig into it with our expert. Before we jump in, though, if you're looking for more guidance on choosing the right gold IRA company, we've got a free checklist you can download. Just head over to goldirablueprint.com/exclusive. Okay, so let's get started. This article keeps mentioning this term luxury asset allocation. Can you break that down for us? What does that actually mean?
Well, it's all about diversifying your portfolio. But instead of just the usual stocks and bonds, you're thinking about things like high-end real estate, fine art, collectibles, even rare whiskeys, and of course, gold IRAs.
Okay, I get the diversification part, but why is this approach especially interesting for legacy planning? What makes this different from just investing in the stock market?
It's all about the long game. See, these luxury assets tend to behave differently than the stock market. They're not as tied to the daily ups and downs, so they offer a hedge against volatility. Plus, a lot of these assets have the potential to really appreciate over time. So it's about preserving your wealth, protecting it from things like inflation, and ensuring it grows steadily for the future. And that's crucial when you're thinking about passing it on to loved ones.
That makes a lot of sense. So the article really highlights gold IRAs as a key part of this strategy. What makes them so special in this context?
Well, gold has this incredible history as a safe haven asset. Think about the inflation of the 1970s. Gold prices soared. While a lot of other investments struggled, it's tangible. It's something you can hold, which for a lot of people provides a sense of security. And with a gold IRA, you get the same tax advantages as traditional IRAs, so your investments grow tax-deferred. And passing gold down to your heirs is usually pretty straightforward.
That's interesting. So we're talking about the stability of gold combined with those tax advantages and the ease of inheritance. That seems like a pretty powerful combination for legacy planning. Now, the article also talks about combining gold IRAs with other luxury assets. For even more benefits, real estate is mentioned quite a bit.
Absolutely. Real estate, especially high-end property, often appreciates over time. Think about a beautiful beachfront property or a luxury condo in a thriving city. Plus, it can generate rental income. You've got that steady stream of cash flow. Now, combine that with the stability and potential appreciation of gold. You've got a diversified foundation for your legacy plan.
That's a compelling picture you're painting. But what about those other luxury assets mentioned? Fine art, collectibles. Those seem a bit more, well, risky, right?
They can be, but they also offer potentially huge returns. Sometimes they even outperform traditional investments, especially over longer periods. Let me give you an example. Remember that Honus Wagner baseball card that sold for millions? That's the kind of appreciation potential we're talking about.
Wow, that's incredible. But isn't it difficult to know which pieces will appreciate like that?
It definitely requires research and expertise. That's why it's important to work with professionals who specialize in these markets. They can help you identify assets with strong potential, guide you through the complexities of buying and selling, even ensuring these valuable items.
So it's not just about picking a pretty painting or a cool collectible. It's about strategic decision-making with the help of experts. Okay, this is all starting to make a lot of sense. But the article doesn't shy away from the potential downsides either. It mentions liquidity, particularly with collectibles. You can't just sell a rare vintage guitar overnight, right?
You're right, you can't. And that's a good point to consider. Some of these assets, while they're fantastic for that long-term growth, they aren't as easy to convert to cash when you need it. It's all about balance and planning carefully. You don't want your entire portfolio tied up in assets that you can't access easily. If you suddenly need cash.
So it's not an all-or-nothing approach. It's about strategically incorporating these luxury assets alongside those more liquid investments.
Exactly. It's about creating a symphony of assets, each one playing its own role. You've got gold, the historical safe haven, potentially shielding you from inflation. Then you have real estate, possibly generating income and appreciating in value. And then maybe a splash of fine art or collectibles, adding that extra layer of diversification and potential for growth.
I love that analogy. A symphony of assets. It really paints a picture of a well-rounded portfolio working in harmony.
Exactly. But even with a well-tuned orchestra, you need a conductor, right? Someone who understands how each instrument works. That's where working with professionals who specialize in estate planning and alternative investments is so important. They can help you navigate the complexities, assess your risk tolerance, and craft a plan that really aligns with your overall financial goals.
That makes perfect sense. Speaking of complexities, the article also touches on the regulatory side of things, especially with gold IRAs. Can you shed some light on that for us?
Of course. Just like any investment, gold IRAs have their own set of rules and regulations. Things like contribution limits, required minimum distributions, which basically means how much you have to withdraw each year after a certain age, and choosing a qualified custodian to hold your gold. It might sound complicated, but a good financial advisor can walk you through all of that. Make sure you're on the right track.
That's reassuring to hear. It's always good to have an expert in your corner, especially when you're dealing with these kinds of specialized investments. As we're talking, I keep thinking back to our free checklist, the one available at goldirablueprint.com/exclusive. It's packed with tips on choosing the right gold IRA company. Seems like it'd be an incredibly valuable resource for anyone thinking about going down this path.
Absolutely. It's a great tool to have. Covers everything from understanding fees and storage options to researching the reputation and track record of potential custodians.
Okay, let's shift gears for a moment and talk about the benefits of luxury asset allocation compared to those traditional investments. The article has this interesting comparison table. It looks at things like wealth preservation, diversification, liquidity, and tax advantages. What are some of the key takeaways for you?
Well, it really highlights the trade-offs involved with each approach. Traditional investments, like stocks and bonds, they offer high liquidity. If you need cash, you can usually sell them pretty quickly. But when it comes to wealth preservation, especially during times of economic uncertainty, they might not offer the same level of security as, say, gold or real estate.
And that's where those luxury assets shine, right? They might not be as easy to turn into cash, but they bring that stability, that potential to weather those economic storms. They're in it for the long haul.
You got it. And then you have the tax advantages. Gold IRAs, for example, offer tax-deferred growth, just like traditional IRAs. You don't pay taxes on those gains until you withdraw the money, so your investment can potentially grow much faster. And real estate. Well, depreciation can be a powerful tool to reduce your tax burden as well.
Wow. I hadn't really thought about the tax benefits in that way before. It seems like there's a lot to consider when weighing the pros and cons of each approach.
Absolutely. That's why it's crucial to understand your own financial goals and your risk tolerance. Are you mainly focused on growth? Or is wealth preservation your top priority? Do you need quick access to cash? Or are you comfortable with those longer-term investments? These are all questions to think about when you're making decisions about your portfolio.
It sounds like a personalized approach is key. One size doesn't fit all when it comes to legacy planning.
You hit the nail on the head. It's about tailoring your plan to your unique circumstances and aspirations.
This has been incredibly insightful. I'm starting to see how combining gold IRAs with other luxury assets can create this really powerful foundation for legacy plan. But I'm curious, what are some of the biggest mistakes people make when they're approaching legacy planning? What should our listeners be aware of?
One of the biggest mistakes is just not planning at all. People get so caught up in the day-to-day, they put off thinking about their legacy. But honestly, it's never too early to start. Even if you're in your 30s or 40s, just taking those first steps can make a huge difference down the line. Things like setting up a will or exploring a Roth IRA.
That's a great point. We tend to think about legacy planning as something for later in life. But yeah, the earlier the better.
Exactly. And another common mistake is not diversifying enough. People get comfortable with what they know, stocks or real estate, and they put all their eggs in one basket. But as we've been talking about, true legacy planning is about building that diversified portfolio, bringing in different asset classes so you can weather those different economic storms.
So not being afraid to step outside that comfort zone and exploring things like gold or even those collectibles we talked about.
Right. And it's not just about the types of assets. It's also about the time horizon. Legacy planning isn't about quick flips or chasing trends. It's about long-term, steady growth, building something that will last.
It's like planting a tree, right? You might not get to enjoy the shade right away, but you're creating something that will benefit everyone who comes after you.
That's a beautiful way to put it. And speaking of thinking long-term, another mistake is not thinking about the tax implications. Estate taxes, inheritance taxes, those can really eat into your wealth if you're not careful. That's where working with a tax advisor or an estate planning attorney can be so valuable.
It sounds like having that team of experts in your corner is really essential when you're navigating all the complexities of legacy planning.
It really is. A financial advisor can help you create a diversified investment strategy. An estate planning attorney can guide you through wills and trusts. And a tax advisor can help minimize your tax liability. Working together, they can create a holistic plan, protects your wealth, and ensures your legacy is passed on the way you want.
It's like having a financial dream team.
Yeah.
This conversation has really changed how I think about legacy planning. It's not just about the money. It's about creating that lasting impact, a foundation for your loved ones to build on.
I couldn't agree more. It's about the values you pass on, the opportunities you provide, the financial security. It's about building something that will last for generations.
That's a powerful thought. It really adds another dimension to this whole conversation. As we wrap up our deep dive today, I want to remind everyone about that free checklist we mentioned earlier. It's designed to help you navigate the world of gold IRAs. You can download it at goldirablueprint.com/exclusive. It's full of valuable tips and insights to help guide you.
It's a must-have if you're thinking about adding gold to your portfolio.
Absolutely. And on that note, I want to leave our listeners with this question. If you could invest in one unique luxury asset to diversify your portfolio and enhance your legacy, what would it be and why?
That's a great question. Building a legacy is a personal journey. It's about making choices that align with your values and your aspirations, creating a lasting impact that extends beyond your lifetime.
What a great way to put it. Thank you so much for sharing your expertise with us today. This has been a truly insightful deep dive.
It's been my pleasure.
And to all our listeners out there, thank you for joining us. On this journey into the world of luxury asset allocation and legacy planning, we hope you gained some valuable insights and that you're feeling inspired to take action. Remember, it's never too early to start building a legacy that you're proud of. Until next time, keep exploring, keep learning, and keep